Stocks were mixed as giant technology companies dropped with Friday's expiration of equity options. Earlier gains were driven by better than estimated economic data and the fall of the dollar. The S&P 500 closed little changed, but still notched its longest weekly gain since August. The Nasdaq 100 dropped while Citigroup said Amazon.com's recent sales event lacked the usual biggest day ever notation. The Dow Jones Industrial Average outperformed with Boeing climbing after Europe's regulators said the 737 MAX may return by year end. And so you ask, why the provocative thumbnail? Well, you'll understand next. In a sign of a potential top in the market, it seems that barely a week goes by that some new celebrity isn't trying to cash in on the day trading craze that's recruited millions of retail traders into the market, which is why I can't help commenting on a recent post from ex-porn star Lana Rhoades, who apparently took to her Instagram account this week to pitch a series of trading classes. In her pitch, she says, "Don't miss the seminar, guys. It's the right time to get into stocks." But as you can see from this chart, there's nothing to worry about because Monday will be the 33rd anniversary of the 1987 Black Monday's collapse in stocks. Black Monday gave me one of my biggest stock market lessons. Don't ever use margin. And although I don't see another Black Monday coming up, there are clear danger signs. So let's take a look. And so we find ourselves back at the VIX, the volatility index, and the symbol is $VIX, and we're using stockcharts.com, and this is the 2-year weekly chart. I keep coming back to this because the VIX is very, very stubborn. Doesn't want to go below that level of 20. In fact, lately in the last month and a half, it doesn't want to go below 25 with a close on Friday of 27.41. Very, very stubborn. And in fact, if you take a look at it, this is a nice little cup and handle, and that could provide a wonderful surprise to the market if you're not paying attention. And for those of you that are new, the VIX basically is the opposite of the market. When the VIX goes up, the market goes down, and the VIX wants to go up. It's created this nice basing bottoming here, and it's just sitting on the 50 MA at this point here, and it wants to move. And I think it wants to head up. Look here at the bottom portion of the chart. Fast line came down, and it now is moving in tandem with the slow line right below the zero line. So it's aching to break out of that and break up through that zero line and move on up. So be careful, be prudent. Now let's take a look at our charts. And now we're looking at a longer term chart on the spiders, the SPY. This is the 10-year weekly, and I wanted to use a longer term chart to give some context here for what I'm about to show you. But let's first start here. Close on Friday was 347. The previous high was at that level here. The current level is somewhere around here. Now I've told you from this point here we came down, we bounced off of the 20 EMA, headed back up here. We're in a danger zone. I think we're going to be in a danger zone for quite a while, even if we get above that previous level. So we've come down here, come up here, and we're trying to move up there. But again, this whole path is very dangerous. So let's see why. All right, you want to take these tops here, more or less. You can draw a trend line like that. It isn't straight, but you get the idea. Now, the bottom trend lines, like this here. So the danger is if we don't get above this trend line and we fail, we could fall all the way down here. Now, I don't necessarily think that's going to happen, but at least in the context of this 10 years, things are pretty dicey up here. Moving on down into volume. Volume isn't going to tell us much, so let's go to the MAC, and that's going to tell us a lot more. First, this top here, above 10. You notice we haven't been above 10 in the entire chart going back 10 years. Well, you can go back 20 years and further, and you won't see how high we are on the MAC. Now, this move down here bounced off of the slow line and back up. So far, that bounce is relatively weak, and I'll show you here. This was the move earlier, and this is the current move. Very weak at that point. So if we do fail, we could fall, maybe not all the way to that bottom trend line, but we could fall far enough into the price rate of change. Another danger sign. That top there, we definitely have weakening conditions. We need to move up through that. But again, price rate of change, we're above 75 of that prior move, and you don't see that anywhere else on the chart. Here into the relative strength, another danger sign. This top here, down here, downward trend line. This top here, downward trend line. This top here, downward trend line. Not good. Into the stochastics, they're not very revealing, and neither is the Williams. So back up here to the price chart, all I'm saying is be careful. What I'm doing is I'm saving my cash at this point for any potential opportunities to come up. And I suggest you do the same. And for today, that's ChewDog Charts. Thank you.